All right, say that. Okay, cool. So we got USD CAD buy limit. So we got 1.26440. SL is 36. SL is 1.26080. I want to say first TP was a 1.15 for sure. Let's see. So we got 26980, 54 pips at 1.15. So that was 54. 1.26980. Make sure I got my numbers right. So entry is good, SL is good, TP1 is good. Okay, so TP2 is gonna be 27880. That's gonna be 144 pips for a 4-to-1. Could definitely make that smaller. All right, cool. So that'll be a 4-to-1 risk to reward. That'll be for 144 of them things. Okay, cool. And then that's 1.27880. And final take profit, which is take profit 3. I can actually get rid of this swing TP. I think this was a 1-to-6. I'll verify. Okay, final take profit is 28820, 238 pips, a 6.5. So we still got some people hopping on. So 6.5 to 1. How many pips I said that was? 238. 1.28820. All right, bet. So this is going to be, the official setup. Obviously, I'm about to take like a couple minutes so I can go put that thing in the MetaTrader. You feel me? So let me go ahead and drop this in the chat. So I'm gonna drop this in the Zoom chat. I'm also going to go drop it in the Telegram chat. So let me copy that. Copy. Oh, damn. Shout out to the undo tool. All right, cool. So I'm about to go drop this in the Telegram chat like so. So once again, if you guys want to, because I'm about to erase this off the screen, make sure y'all go tap into the Telegram chat, because that is where this is about to officially be sent out. Get rid of that. Okay. Make this look real nice and pretty real quick before we send that thing out. Let's see. Oh, 3 hour. Hold on, let me put that 3 on that joint so I can remember. 3 hour. I bet. Okay. I bet that's nice looking enough. All right, cool. Hurry up and save. What you doing? Why you taking so long? Okay, we in that thing. All right, bet. So I just officially sent that thing out. Gonna forward that over there. All right, cool. We're in that thing like a chicken wing. So as we're in that thing like a chicken wing, I'm about to take a couple minutes to be able to go ahead and type that thing in real quick. One thing I dare learn, I'm gonna be honest with y'all, right? So whenever y'all start rocking with YouTube, please be aware YouTube has copyright. So you are never gonna catch me playing any music on this call once I start recording. I ain't gonna say I learned the hard way, but whenever you start uploading a video, they gonna hit you with that copyright joint, right? And you can either upload it and get like, it's like a warning. I don't think it's like a big deal, or you just kind of gotta take that. It lets you like remove that clip that has the music in it. So I ain't trying to deal with none of that, because your boy is getting monetized this year. So I gotta be aware of the rules, because if you mess around and have copyright, they're not gonna let you get paid for the video whenever you start getting paid. What kind of stuff is that? You feel me? I don't want those kind of problems. So I know it might not, it ain't gonna be it ain't gonna be no music being played. The only music y'all gonna have being played is at the beginning before I start talking. Outside of that, y'all just gonna be hearing your boy yap, yippity yappity yap. You feel me? So I'm gonna just try to talk in the background while I go ahead and put in this trade, so it's not just like awkward silence. So but yeah, so I'm gonna just go ahead and start talking about what we're about to go into. So today, like I said, we're gonna be talking about Gbp Jpy. So we got 3 different things we're gonna talk about. We're gonna talk about Gbp Jpy, 36 pips off. Okay, Gbp Jpy, USD Chef, and USD CAD, obviously. So GBP JPY was definitely the best trade so far of the year. It went for, what did it go for? It went for like 100 something pips. I know second take profit was like a 7.5 to 1. So that was like by definition one of those trades to where if you fell asleep and you woke up, I'm gonna be honest with you, you definitely woke up in more than a good mood. You woke up in an absolutely splendid mood. You might have fell asleep a little grumpy, maybe got in an argument with your girlfriend, you know, maybe your mama's like, you need to clean up your room. I don't know what happened. But what I do know happened whenever your ass woke up is you looked at your phone, right? Maybe you woke up before I said take profit got hit. Maybe you woke up after I said it. But whenever you woke up, whenever you went to go look at that goddamn MetaTrader 4, I'm gonna tell you one thing and one thing only. That thing was jumping, right? Or technically, since it was a sell, that thing was dropping. You feel me? So I'm gonna break that down, right? I'm gonna go back over why we took the trade, how we were able to take advantage of the trade, and how we're going to manage the trade moving forward because it did not hit break even. Okay. So that thing still has the ability to go knock out the rest of our take profit. So I just need, hold on. I'm over here talking. I think I done messed up. Hold on, give me 1 second. Let me back up. Hold up. Wait a minute. Let me put the lot size calculator up in it. The other thing I want to be able to mention too, please make sure y'all are using a lot size calculator because some of y'all just be out here, you know, pulling lot sizes out your hind parts. It's like, bro, where'd you come up with that lot size from? Oh, I think this is, nah, bro, we ain't gonna do what you think. What you gonna do is you gonna go to my YouTube channel, right? You're gonna type in Tyree Samuels lot size calculator, okay? And you are going to use a lot size calculator so you know exactly how much money that you're leveraging, because what we're not finna do is we're not over leveraging in 2022. Okay, that is not what we're doing. Like I said, the reason if you're just not hopping on a call, the reason why I'm talking so damn much and you don't see nothing happen is because your boy's over here putting in a trade, okay? And I'm almost done. Got a couple different accounts I need to put these trades on. So y'all should be doing the same thing. So while I'm over here yapping, y'all should be going to your lot size calculator. You should be going to the Telegram being like, okay, here are the parameters. Okay, it's a 36 pip stop loss. Okay, I'm going to risk 1%, 2%, 1,000%, whatever percent you finna risk. Go ahead and figure that out, okay? Because I want you to be all systems go whenever I get up on this chart. I don't want you to be distracted. I don't want you to be confused. Because what time is it? We got 40 minutes left. We already been on here 20 minutes. We got about 40 minutes left. And then I'm gonna send y'all on y'all's merry way. Okay, so I'm putting in the last one. Almost done. Son. RP Big Pun. Come on, man. Y'all know I'm nice with the y'all know I'm nice with the bars, man. Stop playing with the kid. All right, I'm done. Cool. So let me go ahead and set this alert. And then we can finally go ahead and get the night started off properly. I don't know why my computer's moving so slow. Okay. So entry 6440. Another thing I want y'all to be able to do as well too. If y'all do not set alerts, please set alerts. It's one of the greatest things that you could do. Okay. So buy limits active. All right, got that set. Okay, cool. Now this is out of sight, out of mind. Like I said, we're about to actually go look at a couple other things, and then we're going to work our way back to this. So GBP JPY from yesterday, right? Let's see what GBP JPY looking like. So this is what GBP JPY looking like. Ultimately, we want to, oh, did I do anything? All right, cool. So ultimately what we want to be able to see, let me drag this all the way down her. All right, so ultimately this is what we're looking at for the overall setup, which is a goddamn 29 to 1. Lord have mercy, it's beautiful, right? But we got to see if it actually fulfills. So what I want to be able to show you guys real quick is show you guys the setup that was sent out yesterday. Okay, full transparency, right? So everything that I take, right? Everything I personally take, I'm sending to the chat. I'm be honest with you, right? It is pretty much no trade that I'm not going to take that I'm going to just keep for myself. So if I'm making money, y'all should be making money too, assuming that you're taking a trade. So I sent this trade out January 9th, right? Which was yesterday, no, day before yesterday at 5:11. So this is on Sunday because technically it's Tuesday right now. So this is on Sunday, basically right when the market opened. The market opened at 4 o'clock Central. This is about an hour after the fact. Now, this is what the setup initially looked like. So as you guys see, you know, I initially marked it up on a 12-hour time frame and things of that nature. You can see, you know, I got my take profit set. You know, I brought out the fib. So I broke this down yesterday, but I'm gonna go back into detail since the trade actually ended up going in our favor. So the original picture is a completely different markup than what I actually sent back out. So this picture is not actually accurate with the parameters, but the original trade I sent out actually had a 40 pip stop loss. I ended up going back, revamping it, made it a 16 pip stop loss, which is why our risks to rewards are, you know, so much better. So as you can see, take profit 2 actually did end up getting hit for 126 pips. 7.5 to 1 risk to reward. What does that mean? So obviously, if you didn't take partials at first take profit, which you should have, you know, in the grand scheme of things, you potentially could have maxed out at making 7.5, almost 8 times what you was risking. So if you was risking $10, you could have made close to 8. If you was risking 100, you could have made 800. If you're risking 1,000, could have made 8,000. Okay. So I'm always going to let you guys know, as I put right here, updated entry and stop loss, please hurry and update trade is close to entry. I also let you guys know when the trade I did was active. If you didn't get a chance to put in the sell limit, you may execute by market. So you guys had a lot of different opportunities to be able to take advantage of this. Even though I know it was at 1 a.m., this was during the call I actually did last night. So 25 pips in profit, I'll let y'all know. And to be honest, I think around like 4 o'clock in the morning, I definitely fell asleep. Whenever I woke up, the market had already obliterated take profit 1. So it was already up 95 pips when I woke up, I'm be honest with you. Take profit 1 was 61. By the time I woke up, that joint was up almost 100. So whenever I woke up, I was already up a 5.5 to 1. So if I was risking $10, I would have woke up to 50. If I was risking 100, I would have woke up to 500 something. You feel me? And then ultimately, right, USD Chef is the other setup that we're going to talk about. So now let's go ahead and get back to the chart. So with Gbp Jpy, what I'm going to do is I'm actually, nah, I tried to do that yesterday. So what I'm going to do is I'm just going to remove this and I'm going to kind of just like break it down. Nah, let me pull up a different data feed. I really don't want to like erase that joint. All right, Gbp Jpy Owanda. Okay. So, you know, for anybody that usually gets on my, what the hell? Did I actually, hold on. Okay. Which one is, okay, this is the one. Okay, bet. All right, bet. So I'm gonna use a different data feed, which is Owanda. Okay. So, for anybody that normally gets on my calls, y'all know, you know, I pretty much do everything the same way. So it's going to be pretty repetitive over and over and over again, but that's the point. So I like to be able to focus on a 1 hour. The 1 hour specifically is a time frame, you know, from countless hours of backtest, and that's what ends up working best for me. So I don't necessarily got to look at the daily. Even though y'all saw the 12-hour, that's like what I do after the fact. Like whenever I'm literally just flipping through currency pairs, I'm only looking at the 1 hour. I'm not going to the 4. I'm not going to the 30-minute. I ain't doing none of that. I'm looking at the 1 hour. So from the 1 hour, the first 2 things I want to be able to initially figure out is what is the overall trend of the market. Okay. So is it an uptrend? Is it a downtrend? That's the first thing I want to verify. Okay. So kind of like how I broke this down yesterday, because I did break this down yesterday. So I'm gonna try not to take up too much time. Because like I said, same concept. The video that I did yesterday is on my YouTube channel. So if y'all want like a more detailed example, since I'm gonna kind of run through this, y'all can go check out the video on my YouTube channel. I uploaded it earlier today. So this high was created. Okay. Now the way that I was looking at this is whenever this high was created, in order for the market, in my personal opinion, to be an uptrend still, I would want to see this high being broken. Okay. So that high is there. We also have this low, which is here. But the main difference is this low actually got broken. So what would this be considered? This would be considered a BOS, which is a breaker structure. Okay. So with the breaker structure, that's basically indicating that if the market either breaks a previous high or previous low, you know, in a way that you can basically base your bias off of, you would like to see the market continue in that direction. So this high did not get broken, but the low got broken. So in my personal opinion, I'm really looking at this like a downtrend. Okay. Regardless of how aggressively this market is moving up, I'm looking at this as a downtrend because the market broke the low, not the high. So now that I have that information, the next thing I want to be able to do is I can actually take my Fibonacci, not this one. Let me So I can actually take my, there we go. I can actually take my Fibonacci from the high to the low, right? Like how you see. And the thing that I'm looking for is seeing how deep of a retracement the market is given. Because technically, if this is a downtrend, this would technically just be a retracement to be able to give us a continuation, okay? It doesn't necessarily mean I'm looking for it to come all the way back down here, but I'm just looking for, you know, something to make me confirm that my bias that I'm thinking about as far as the overall trend is accurate. So The fib actually shows us we've gotten the deepest retracement possible on the Fibonacci, which is at 88.6%. At that moment that we got that retracement, you guys can see the market gave a very aggressive impulse. Actually, hold on. Let me take some of that away. So this is what the market would have looked like at the time that I was looking at the trade, my bad. So we reacted off the 88%, which also to the left is reacting off of a previous resistance level, right? So this reaction, if you guys notice, right, I'm gonna take this trend line tool. We're gonna see how many pips this was. That was about 160 pips. If you think about this entire move up, nothing close to 160 pips has ever happened as far as any type of retracement. So this is the most aggressive retracement within this entire uptrending move. So this could be the market showing us, hey, this might be us getting ready to show you that we might be getting ready to drop. All this other stuff, like look at how weak all these, you know, fake ass retracements are. Even something like this is not really that aggressive, right? This is 160 pip drop compared to the next most aggressive one, that's 88 pips. So literally half of the move. So this is the most aggressive downside move by far. So this could be when the market is getting ready to drop, okay? So now that I've able to get all that information, now I ultimately have formed my bias on what I think the overall trend of the market is, which is a downtrend, okay? Now, just because I've identified it as a downtrend doesn't guarantee that I'm gonna take you know, a trade with the trend, because as y'all know, you know, a lot of my trades are counter trend, but I still want to know what trend I'm trading in, because if I'm taking a counter trend, I'm not really going to try to swing it like that. So all those things kind of come into perspective, right? So now that I've confirmed it's a downtrend, I'm now going to, you know, get away from looking at all this, and I'm really just going to focus on this area up in here. So now that I'm focused on this area up in here, it's going to be pretty straightforward. So basically for me, what I like to be able to show you guys is the RSI to be able to detect the extremes and divergence, right? So whenever I reference the extremes, I always tell you guys basically what I want to see is I want to be able to see this white line come outside of the purple box. Why? That simply means whenever the market is trending in any given direction, this is a symbol that the market is weakening in that direction. So if the white line comes outside of the purple box to the upside, that means the upward momentum is becoming weak. It doesn't mean automatically hop in for a sell. It just means you can start, you know, looking for signs that the market is weakening, and maybe you could possibly take a reversal. Okay. If the market were to come out of the purple box to the downside, right? Something like this, same concept. It doesn't mean immediately try to hop in for a buy, because as you can see, the market kept dropping, but eventually, right? What did it do? From this point, it started moving up aggressively. So it didn't initially give you the ability to hop in for the buy whenever you saw this, but this on top of this, all these were showing you that the downside momentum is getting weaker. So all you had to do is start getting ready, you know, for a possibility to maybe take a buy. Okay. So the way that I'm looking at this is I'm like, okay, this came outside the purple box, but if you notice, right, the market gave a small sell-off, but it went higher again. So if you would have tried to sell this, your stop loss would have been hit. So the way that I'm looking at this information is going to be like this. I actually see one of my favorite things in the market, which is going to be called divergence. So not only do I see that the momentum is weakening, I also see divergence. Divergence is one of my favorite things to be able to give me the confidence to take a reversal. In my personal opinion, it's the best confirmation to take a reversal. Because if you don't have, you know, certain confirmations whenever you're taking reversals, you really could just hurt yourself out here. So let me see if they got any valid DeLoreans that were just called out. If not, we just go get right back to what we was doing. Oh shit, that actually does not look bad. That we gonna look at that Euro cap. That's ugly. Euro USD. That's ugly. USD CAD. So we're already looking at USD CAD. They're looking for a sell on that. I'm obviously not going to take that because my bias is for a buy. So I'm gonna just, that's not a bad looking DeLorean, but I'm not going to take a sell if I'm already looking for a buy. And what else we got? GB. No, that's old. Okay, so let's go look at Euro CAD. So let's make a pivot real quick. What time frame is that? The 30-minute? No. Yes. Euro CAD. I forgot I have this marked up. I didn't take that though. Let's see, 30-minute. EuroCAD. I'm gonna pass on it. I'm gonna just give you guys a gem real quick that I noticed. So personally for me, when I take DeLoreans, one thing I do not like to see just from back testing, I don't like taking DeLoreans that have already kind of like blown past the highs or lows. Like I would rather, since this candle is already pushing past these lows, I'm gonna just leave it alone. Like if it would have stopped here and then pulled back before it dropped, that would have been different. But since it already broke past these lows, and my experiences, once it kind of breaks past these lows before it gives you the entry, if it pulls back, it might not be the same. So I'm gonna just leave that alone altogether. Like I said, I'm not really tripping on that. Okay, cool. So we can get back to what I was talking about. Where the hell is all right, back. So back to GBP JPY. Did this activate? Hold on, y'all. Okay, cool. Okay, so the buy limit. So as y'all see, that's a benefit of having the alert. Y'all just saw the alert come across the screen. Hold on, let me look at this real quick. USD CAD. USD CAD, USD CAD, USD CAD. All right, cool. So we're gonna let that rock out on USD CAD. All right, but so let's get back to GBP JPY. So we'll let that do what it do. So back to GBP JPY, like how we were talking about. Okay, cool. So we're gonna go back to the 1 hour. We're going to erase this shit one more time. All right, cool. So like I said, basically what I saw was divergence. So the easiest way to kind of see divergence for new people is if you actually change it from the candles to the line chart, right? So now the chart actually matches the RSI. So if I were to look from this point to this point, right, I want to be able to see the RSI basically do the complete opposite. So if this is obviously going up, I want to be able to see the RSI going down, which is exactly what we have, right? So in this instance, this is a confirmed divergent play, which in my personal opinion is why you basically had this immediate reaction after the market broke this previous high. So, I mean, basically after that, like basically what I just showed y'all, those are basically all the confirmations I look for. The final thing is, I'm gonna just go ahead and exit off of this and go back to the real chart. The final thing that I would have been looking for is some sort of, like institutional or engulfing candle to be able to play off of. So basically what I ended up finding was this 1 hour candle right here, right? And then basically I just traded off the opening of that candle, put my stop loss above the high, added 2 pips of spread. On top of that, I don't know if you guys see what I see, but I also ended up seeing, a head and shoulders pattern, left shoulder, head, right? And then this essentially would be the right shoulder. So, obviously we already know what this ended up doing. So if I just simply let that play out, let the market work up, work up, work up, work up, work up. And you guys see actually how good of an entry we actually got. Thank God it actually activated, because this is one of those joints to where, sometimes the entries are a little too cute and the market don't activate. So as you can see, we did not have any candles actually close above our entry. And then, once the market decided what it was about to do, that it was basically a wrap. So it basically, like I said, whenever I woke up, I was like here. So it had already blasted past take profit 1, and all that type of stuff. So I mean, it was pretty exciting for me as far as I'm concerned. So now, basically what I predict that the market is going to do. So we're already at break even. Take profit 1 got hit, take profit 2 got hit. We still got TP3 and TP4 for our final take profit. What I think is going to happen is if I were to do the same concept, take this fib from the high to the low, right? The market has already come back into this imbalance right here. So maybe it's just going to drop from here. If not, this entire zone of the fib is, valid. So if the market, pulls back up, anything within this zone makes sense for it to continue dropping down. So, like I said, I would just keep holding, don't necessarily think about manually closing the trade or nothing like that. Just hold it, let it do what it's going to do. At this point, you've already made money. It's either going to hit your break even, or, obviously it's going to continue dropping and put you deeper in profit. So that's basically going to be GBP JPY. Pretty dope trade. Definitely by far the best trade of the year, even though considering we're only fucking 10 days into the year. But great trade, great trade, great trade. So next we're gonna talk about USD Chef. So USD Chef actually called out. Shit, when did I call out USD Chef? I think I called. Hold on. What is this? This is January 4th. So I called this out last week. So let me go find that. I'm fucking starving. Excuse me. All right, bet. So USD Chef is going to be an example of one of the things. I don't remember who the hell I heard this from, but holdyourtrade.com. Like, all too many times I used to get out of trades too early just because in your head, it's like once you hit take profit and it starts pulling back, you don't want to get caught up in a pullback. So you just close out the position. That's actually a horrible thing to do because you're not allowing the trade to actually fulfill itself. So basically, you know, first take profit got hit. I'm gonna show you guys real quick. So first TP was 29 pips. This second take profit literally didn't get hit until yesterday. But think about it. You would have been holding this trade damn near a week now. Okay. But what are you tripping about, right? You're literally not doing anything. You're just letting it play out. So up 20 pips. And this is kind of like something I was letting people know. So basically, what I want people to understand is I'm gonna show you an example of why I basically sent this message. So at one point in time, the trade was up 20 pips. At one point in time, it was also up 30 pips. So I said, by the way, when I send out a trade and it is in profit, it is up to you to adjust your stop loss to break even. I'm personally going to hold. Just want to give you the option when I go break even, I will say it. So anytime I say the trade is up however many pips, that's basically me symbolizing to you. If you want to go ahead and adjust your stop loss to break even, you can do that. But if you don't see me say the words adjust stop loss to break even, I'm still holding it. My entry is still open. It can still pull back and hit my stop loss. But I want to be able to give y'all the ability to make your own decision. Now, I'm going to tell you why I hold my trades just based off of me back testing. So look at this real quick, right? So before I actually go down and break down this trade, notice from entry, the market ran about what, 30 pips? And what did it do? If you would have put your stop loss at break even, you would have got taken out here. You would have missed the entire fucking move. You feel me? So this is why I specifically said I'm going to hold it. But if y'all want to adjust to break even, I'm letting you know we're currently up 20 to 30 pips. Because some people base their stop loss off of break even based off of, oh, I'm up 15 pips, I'm going to adjust my stop loss to break even. I don't trade like that. I wait for either a previous high or a previous low to be broken. If I don't see that, I'm just going to hold it until I see that. So basically what I did was when the market ended up peaking here, I was still waiting for this high to be broken. Because if you think about it, there is no structure within this entire move to be broken. So there was no reason for me to adjust my stop loss to break even. Once it consolidated, right, formed both of these highs, these equal highs, once the market broke past this area with this candle, that's when I adjusted my stop loss to break even, because this is what I would consider a structure level being broken, which is how I validate when I'm going to adjust my stop loss to break even. Okay. So if we rewind, right, I'm going to basically break this down the exact same way. And all these trades that y'all are seeing are going to end up going up on my YouTube channel. So that's why I like to keep all these markups and I don't erase them until I've actually, you know, like recorded and thrown it on my channel. So once again, I'm gonna go ahead and pull up, you know, a different data feed, USD Chef, but we got about 20 minutes. So we actually making pretty good time. Whew. All right, cool. So let me erase that so we can go over this one more time. So I am going to, what was this on the 4 hour? Bam. All right, so this is roughly where the market was when I sent out a trade. We can verify by looking at the picture. If we look at the picture, that's exactly what it looked like at the time I sent out the trade, right? Cool. All right, so let's go over the same concept, right? So once again, we're going to start off on a 1 hour time frame, because as I told you guys, that's my favorite time frame. So the first thing I said is I'm going to identify what is the overall trend of the market. So as far as I'm concerned, the overall trend of the market is an uptrend, right? Why do I say that? Hold on. Let me move that over. Why do I say that? Because as you guys can see, barely, but the market ended up breaking this high. So barely, but barely is valid. So the market ended up breaking this high. So at that point, as I told you, if I see a previous high or previous low being broken, that's how I can start forming my bias of what direction I think the market is actually trending in. So as far as I was concerned, the market was trending up. It broke a high, right? What did it do? It gave a retracement and it did not do what? It did not come back to break this low. So the same way that I just broke down why I was looking for a downtrend on GBP Jpy, this is why I'm looking for an uptrend. The high was broken, the low was not. Same concept. If I were to pull out the fib, right, we can see how deep of a retracement the market gave us. So if we pull back out that fib, basically same as GBP Jpy, the market actually gave us the deepest retracement possible. And at the same time, it gave us a very strong impulsive move. So this is basically like GBP Jpy in reverse. Every setup is not going to pull all the way back to the 88%. It may do the 61, it may do the 71. But if it pulls back to the 88%, it doesn't guarantee the market is just going to go in your favor, but that's definitely by definition going to be the best opportunity you can take, because the deepest retracement is going to give you, you know, the best, I mean, you know, risk to reward and pip count and all that other type of stuff. So what do we just do? Once again, we identify what is the overall trend of the market, which is an uptrend. Okay. Next thing I need to figure out is what direction am I going to look to trade in. So we already know that I took a buy, so there's no reason to kind of go over that kind of info. So obviously we're looking at a buying opportunity. So let's look at some different things that I was personally looking for whenever I was taking this trade. So another thing that we see, this market also did not break this low over here. So this is almost like another support area that you can look at that is showing that the market is not breaking too many structure levels to the low side. It basically just wants to keep working its way up. So for me, really what I focused on was this area right here, which is this incredibly big ass impulsive move that you guys see, which is about what? That's about 85 pips. So kind of like the same concept. If you guys look at this entire move down, outside of maybe something like this move, the rest of this is just like really choppy. This is kind of like the straightest move up, but as you can see, it ended up peaking, but it just kept dropping. So this is, you know, a very strong move. And what happened last time you had a strong move? What did the market do? It ended up pulling back somewhere back into this area, and then it gave us another push up, which peaked up here. So I would like to basically see something similar. So, you know, same thing. If I pull out my indicators, right, what we can start noticing is the market is doing what? Giving us divergence, okay? Now, divergence is not always going to be set over, you know, such a long area. Normally, I like my divergence to be relatively, you know, like, what's the word? Recent. So, you know, same thing. If we actually go back to our candles, turn it to the line chart, what do we see? So if I actually go from here to here, right, the market is obviously working its way down. At the same time, if I'm looking at the RSI, the market is obviously working its way up. Divergence. Okay, what did I say divergence is good for? To be able to identify, you know, potential reversals. Okay, so we got the divergence, right? We also have the market showing us that it's becoming weaker. So these were instances showing that the market was getting weak to the downside. This was also another instance showing that the market was getting weak to the downside. So it's showing us, I mean, this didn't technically peak out, but it's basically touching it. So we're having a lot of instances showing us that the downward momentum is getting weaker. Okay. All I'm doing with this information is I'm building confidence. Okay. Trading is literally all about confidence. Nothing is a guarantee that I'm going to win just because I'm pointing out all these things, but it's all about how you feel when you take the trade. And if you can look back, win, lose, or draw, and be like, you know what? I did exactly what I was supposed to do, and I don't regret anything. And you can't do anything better than that. So all I'm doing is building confidence as to why I want to take the trade. Okay. So now, basically what I'm finna do is what I didn't show y'all on GBP Jpy, because GBP Jpy was a little bit different, but for the most part, you know, if you guys notice, I'm not dropping down to any of these lower time frames. Basically, whenever I'm looking for an entry, I pretty much stick between 1 hour and daily. Okay. As you can see, I literally have every single hourly time frame. I used to think about going, you know, like 13, 14 hour, 15 hour, but I was like, you know what, that's way over the top. So like I said, I back tested enough to where I'm not going to take that. One thing I want to be able to tell y'all as well too, if y'all are trading DeLoreans, one thing I learned, I personally stay away from all trades that are touching the 800 EMA, just because percentage wise, as far as I'm concerned, it's like it's 50-50. It's 50-50. I've taken enough to be able to confidently say that. So as good as a DeLorean looks, just remember Tyree told you, if that DeLorean is touching that 800 EMA, I'd personally stay away from it, just because it's like it's a 50-50 chance. I don't really feel too confident about it. So once again, I'm gonna pass it up. Anyways, though, coming back to the setup, now what I basically need to start doing is looking for an entry. So I showed y'all how I found an entry on GBP Jpy. It was based off of that 1 hour candle, which is over here. So on USD Chef, shit, I need to do this again. My bad. All right, so on USD Chef, yeah, let me rewind this one more time. So on USD Chef, basically, what I usually do, I feel like it's a little unorthodox for sure, but it works for me. So within this big impulsive move, how I look for an entry is I start flipping through these hourly time frames to see if I can find an engulfing candle. If I find one, I have an entry candle. If I don't find one, I just got to keep it pushing. So on a 1 hour time frame, we just got a lot of imbalance. I don't trade off of imbalances. 2 hour, right? 2 hour, no candle. 3 hour, no candle. 4 hour, we got a candle. Okay. So what I mean is I would like to find the biggest engulfing candle on the highest time frame. I don't need to go past this because obviously since we took the trade, this is where I ended up coming to my conclusion of the candle that I'm going to focus on. So like I say, for the people that are regulars on my call, this is about to be pretty straightforward. It's going to be more detailed than a Gbp Jpy setup. But basically, the first thing I'm going to do is I'm going to start off by looking for the 50% of this candle. Okay. So what I mean by the 50% is basically whenever you're looking at an engulfing candle, the 50% of the candle is going to act as like the equilibrium, the sweet spot, the sensitive spot. And two things are going to happen. It's going to give you the best entry. I take that back. Three things are going to happen. You're going to get the best entry, the best risk to reward, and the smallest stop loss. Okay. Just because obviously it's in the middle of the candle. Now, also keep in mind the 50% is not guaranteed to be hit. So a lot of times, if you're just straight going for the 50%, you're going to miss out on a lot of sales because the market could come here, right? And then just take off. And you still waiting for the trade to dip a little lower and the trade just leaves without you. And instead of your brain being like, damn, it's going to take off, you just thinking, nah, it's going to pull back. It's not going to pull back, okay? Obviously, there are situations to where it is going to give you a deep enough retracement to take advantage of the 50%. But from my personal perspective, you're going to miss out on a lot of trades if you just straight go 50%, okay? So what I ended up being able to do to be able to find a good entry is kind of like I show you guys. I teach you guys to be able to draw a box so you can have an entry zone. So from the opening of this candle to the 50% of the candle, right? So the opening of the candle to the 50% of the candle, this entire zone can be an entry zone. So me personally, I like to do buy limits and sell limits. I rarely do market execution because I don't want to sit here, wait for a rejection, wait for a doji candle. I ain't trying to do all that. And as you guys will see, like literally every trade I send is a buy limit, a sell limit, and they activate because like I said, I back test enough to where I can confidently pick an exact entry knowing for the most part it's going to activate. You know what I'm saying? If it don't activate, it didn't even come close. I don't really have trades to where it came like a couple pips away. It's like it's either going to activate or it's just not even going to come close and we'll just delete it. Okay. So within this entry zone, you got two people. You got the people that are going to wait for the market to retrace. They're going to wait for some kind of rejection, some type of candlestick formation, whether it's a doji, engulfing candle, whatever formation that you might look for to be able to take an entry on a trade, you can do that. What I'm going to do is I'm going to show you guys how I'm going to find my exact entry. So even if I'm asleep, I'm at the movies, right? My phone dies. I'm still going to be able to get in the trade, just like how I showed you guys with USD CAD, okay? Because I'm going to find a precise entry, right? So what I'm going to do is I'm going to go back to my fib once again, but I'm not going to use this 50%. I'm going to go back to the regular fib, okay? So with this regular fib, basically the easiest way I can explain it is within this entry zone. Keep in mind, I don't actually need to draw this for myself. I'm just drawing this so y'all can see what I'm about to reference. I'm going to look for an entry based off of the fib levels being within my entry zone. So in this example, I have two different fib levels within my entry zone. So you can be the person to where you can do one of two things. You can put all of your position at either one of these, or you can split your position. So if you're risking $10, you can put $5 here, $5 here. If you're risking 20, you can put $10 here, $10 here. Me personally, I don't twin trade. I don't split positions. I'm putting everything at one entry. So once again, from back testing, what I ended up finding out is, yeah, the common person is going to be like, well, shit, I'm going to go at the lower entry because I'm going to have a smaller stop loss and I'm going to have a bigger pip gain. You can do that. But once again, just like the 50%, the lower entry is not necessarily guaranteed to activate. So what I like to do is I like to go with the higher entry, okay? So the higher entry is going to be the 71%. I'm not going with the 61 because it is not in our entry zone. So literally, this would have been my entry right here, right? Stop loss is pretty straightforward. I'm always obviously going to put the stop loss right below the engulfing candle. I'm always going to also add 2 pips of spread just in case. And, you know, basically, if I hit play, you guys are going to see how this ended up playing out. And like I said, I'm literally showing you guys exactly what I do whenever I come and mark up the chart, and I explain all these and a lot of detail on these calls. And like I said, I record these for a reason, so you guys can always go back on my YouTube channel, rewatch these videos if I'm, because I know I'll be talking fast and all that type of stuff, and maybe I want to ask a question, and so y'all can always go back and rewatch it. So as you see, this is what ended up happening. Think about what I said. Think about if you would have looked for this entry, you would have missed it. Okay. Think about if you would have looked for the 50%, you would have missed it. So the entry that I have, like I said, is based off of me back testing. And it is not just randomly that I'm just like, I'm going to get in here. Okay. Everything I showed you guys has been proven. And you guys have seen, you know, over the course of the past few weeks since I started back doing these calls, this should be hidden. You know what I'm saying? Obviously, we lose. So don't get it twisted. Like, nothing is a guarantee. But, you know, the trades that we win, I mean, they're pretty favorable. So if we go back to USD Chef, just to break down, right? This take profit just got hit this week, but think about it, right? You might have been the person to where, right, the market ended up going up 91 pips. You saw this big ass bearish engulfing candle, like, oh man, I'm gonna just go ahead and exit. Don't do that, because guess what? The market ended up going up and hitting take profit too. So that's why I said, if you're too fixated on looking at the chart all the time, you're going to make an emotional decision. Because yeah, if you're seeing this big ass bearish engulfing candle, your brain is telling you, man, this is probably going to come back and hit my break even. Let me just salvage the rest of the profit that I got. Don't do that, right? As far as I'm concerned, once you adjust your stop loss to break even and you take partials, let the trade either hit break even or let it do what it did here, hit the next take profit. So guess what I'm doing, right? I ended up moving my break even here, and I'm about to do the same thing. At this point, I've now taken more partials. So the market is either going to pull all the way back, hit my new break even, or guess what? It's going to continue working its way up and hit my final TP. That's USD Chef, right? And then finally, like I said, we actually zoomed right past this. I only got 5 minutes left. Hold on, let me promote something real quick on my Telegram. Not my Telegram, let me promote. Let's go live. Call this from the start. Give me 1 second. Was it John Dollar and what's his face? Rob Kumar. Forward. Call starts in what, 5 minutes? Call is live in 5 minutes. Because guess what? I'm a junkie to the information. As soon as I get off this damn call with y'all, I'm about to get on a call with some Go Live educators, and I'm still finna learn. You feel me? Like, that's one thing I'll be thinking people be getting fucked up. Y'all make a little bit of money, y'all think y'all don't need to learn no more. That's whenever your success gets capped off. So don't be that person, okay? None of us are millionaires yet. The vast majority of us are not 6-figure traders yet. So humble yourself. Don't go make a couple thousand and then be like, man, don't be that person, bro. You feel me? What else am I trying to send this to this? Call start. No, call is live in 5 minutes. I bet. Yeah, I only send it to. Okay, cool. So we're about to go ahead and wrap this off with the trade that I just recently sent out, which is USD CAD. Let me actually go ahead and move this to my green folder. Whoo, let me drink some water. My mouth is dry. Okay. So USD CAD, right? About to be the same damn process. You feel me? Same damn process. So once again, let me pull this up. Let me pull up a different data feed. USD CAD. Owanda. Cool. All right, bet. So let's do this one more again. You feel me? One more again. You're all right, cool. Y'all say rock with me. All right, bet. So look, same thing. We're gonna start from scratch one more time. So this is pretty straightforward. I ain't even got it. I mean, this is obviously an uptrend. Like it don't even make no sense for me to, you know, try to get all technical. This is obviously an uptrend, okay? So I mean, you might be able to say it's a temporary downtrend. You did have, a break of structure here. The market did actually end up pulling back and then dropping again. So in the grand scheme of things, you could say this is a short-term sell, but overall, this is obviously an uptrend. It's no reason to even go any further than that. So I'm not even going to waste my time doing that. The other setups weren't as visible. Like this is clearly an uptrend. So it's going to make sense as to why we were looking for a buy. Like I said, it's not a guarantee. Trade could still hit stop loss. Who knows, right? But we go let it rock out and we go see what happens from there. So basically what I ended up seeing was the primary thing that I ended up liking whenever I saw this setup. Let me, I don't even need to erase this because it hasn't really gone anywhere yet. So I'm gonna just leave that there. I basically ended up seeing divergence. So the divergence is pretty much initially what got my attention from the setup. So once again, as you guys can see, we got divergence going from there to there. Turn this to the line chart. This is going down, right? Slightly. This is not as an aggressive downward, but this is clearly going up. This is clearly slanting down, okay? So it actually looks a little bit better on the 3 hour. Yeah, so it looks a little bit better on the 3 hours. So if you guys look at that, right, this is obviously going up. This is obviously going down. So technically, in a sense, right, this market could just keep dropping. This is obviously not as clean as the other two setups I just showed you guys. So Gbp Jpy and USD Chef were cleaner setups. But I kind of just train my mind to where if I see something that I like, I'm gonna just take it. I'm not really gonna think too hard about it, because if you do, you're just gonna psych yourself out and just overthink the shit. So I initially saw the divergence, right? On top of the divergence, if I go back to the 1 hour time frame, the other thing that I also saw was going to be, is this a DeLorean? Yeah, it is. Okay. So the other thing I also saw as well was going to be, we also have some more divergence. So we have like shorter term divergence. So initially, right, we went from here to here. But if you guys look here to here, right, we have more divergence. Okay. So we got like two different types of divergence within the same move. So that's why I said this is what initially caught my attention. Okay. I'm like, okay, we got like OD divergence. We got divergence from here to here. We also got the smaller frame of divergence from here to here. I'm like, okay, it's lit, right? So we also have, right, we have the extremes being hit. So obviously the divergence happening is the extreme. So what does that mean? Like I said, anytime the white line comes outside the purple box, it means that that trend in that direction is weakening. So this means that this downtrend, potentially is getting weaker. And the divergence is kind of like, giving me the ultimate confidence. So yeah, I'm gonna take about 5 more minutes because it's already 2 a.m. and I really just want to be on these calls for about an hour. So I'm gonna speed this up. We'll have about 5 more minutes and then I'm gonna call it a day. Let me see if they called out something else. What's this? Yeah, they just called out that 1 hour. I don't really care for this DeLorean anyway either. Just because another thing I started doing with DeLoreans, I pass up every DeLorean that is not actually touching the aqua. So coming close to the aqua, that hole isn't close to the aqua, that shit doesn't exist for me. It's either touching that joint or it's not. So if it is literally not touching the aqua, I have zero interest in it. So kind of getting back to what I was talking about, the next thing we ended up having was, one thing I want y'all to be able to notice is, in my personal opinion, one of the ways that I confirm divergence is if you have an impulsive move after you see the divergence. So if we go back to Gbp Jpy, think about it. Whenever I showed you guys from here to here, from here to here, think about how strong of a move we had immediately following that divergence, okay? So this is not as strong of a move, but this pair obviously doesn't move as much as a Gbp Jpy, so it's relative. So same concept. Immediately following the divergence, what do we get? We got a strong impulsive move to the upside, about 80 pips, which for USD CAD is pretty significant, right? What else did we get? We left a pretty fat imbalance up in here, okay? So a lot of times whenever you get that imbalance, right, that is also going to be another confirmation, right? You might not always have such a nice looking imbalance play, but we have that here. And that's currently like where the market is sitting at. So what I would like to see is this zone hold, okay, to be able to give us the move up. So within this imbalance, right, I'm about to do the same shit I just showed y'all on USD Chef. I'm about to work my way up these time frames and see if I can find an engulfing candle, because like I said, I like the fact that I see the imbalance, but I don't trade off of imbalances. I only trade off of engulfing candles, okay? So if I go to the 2 hour, right, no candle. If I go to the 3 hour, we have a candle, right? There's candles on some of these other time frames, as you can see. So 3 hour, we have a candle. 4 hour, we have a candle. 5 hour, we have a candle. So we have a lot of different engulfing candles, which is what I actually like to see, because that it shows that it might be a stronger candle if you have multiple time frames that show that you still are holding that. So you might ask, okay, well, how do you know which one to actually mark up? The way that I look at it, remember what I said, I want to find the biggest candle on the highest time frame. So what I usually do is, if I see multiple candles across different time frames, I'm going to draw a box on it. And then whenever I start working my way through the time frames, I can see which one is the biggest. So notice the 3 hour. When I go to the 4 hour, see how the 4 hour has some space? That means that the 3 hour is a bigger candle because there's space in here. If I go to the 5 hour, look at that. It's still space up in here. If I go to the 6 hour, right? 6 hour even still has like a little bit of wiggle room up here. So by definition, the 3 hour is the biggest candle, even though it is not technically on the highest time frame. So I want a combination of the biggest engulfing candle on the highest time frame, okay? So by definition, from what I just showed you guys, the 3 hour candle is where I'm going to reside at, okay? Now, from here, I'm about to do the same thing I just did on USD Chef. What am I going to start off with? I'm going to look for that 50% of this candle, okay? I am going to go 50 level, right? What did I say? You know, this is going to serve as an equilibrium, you know, the soft spot, the sweet spot, all that good stuff. I'm going to also draw, you know, my entry zone. So from the opening of this candle to the 50%, this will be my entry zone, okay? Now, once again, within this entry zone, what am I going to look for? I'm going to take this other fib, come from the low to the high, right? I am going to basically, like how I explained in the last one, I want to be able to look for a fib retracement to actually give me my entry. So it is not by mistake, same concept. This is exactly how I found my entry once again, right? Remember, this has 2 entries in the zone, just like USD Chef had. But what did I say? It is not guaranteed that the market is going to hit the lower entry. So since this trade hasn't actually done anything yet, yeah, technically speaking, this market could, you know, drop deeper and it could hit this and then go up. But I don't know that it's going to do that. And like I said, I got to a point to where I don't give a damn about being super cute with my stop losses, right? I've determined that the biggest stop loss I'm comfortably using is 40 pips, okay? So anything under 40 pips, I'm cool, right? What I'm not cool with is trying to get too cute with my stop loss and I just miss the whole setup. I would rather be in drawdown and get in the trade than miss the whole trade because I'm trying to be too cute with it, okay? So at this point, the trade is already active. So it's literally nothing else to do. It's like I said, one of 2 things is going to happen. It's going to hit stop loss or it's going to go in our favor. So as you guys can see, literally in real time, you can see the market is still dropping. So like I said, I'm cool with that. Yeah, it might come to the second entry, but what did I show you guys on the last example? The second entry did not get hit. So I'm playing based off of what I've already seen happen. I'm not playing based off of what I want. What I would like, yes, for the market to always come to the deeper retracement, but it just doesn't always work out like that. So at this point, this is basically where we are with this trade. As you guys can see, if I go ahead and erase this and just go back to the original setup. So you guys can see like where we are. You see where my entry is. And, you know, we'll see if it gives a little bit of a deeper retracement, because if you think about it, the market may just want to fill up this imbalance. So if we look at this 1 hour time frame, to close this imbalance, it would need to come down here. So obviously the imbalances don't always have to be closed. Sometimes it goes to the 50%, sometimes it goes to the opening. So I'm not really tripping if the market drops lower. On top of that, I mean, we do have another engulfing candle down here. So I don't know how deep this market is going to retrace. But what I do know is I'm already in the trade, so I ain't got to worry about missing out. And at that point, it's pretty much it, y'all. So basically, with that being said, I appreciate all y'all for being on the call. Like I said, this call is recorded, so I'm gonna drop it on my YouTube channel tomorrow, technically later today. And you know, obviously pay attention to the Telegram chat to get any updates. If any of y'all got on the call late and you are not able to put in a buy limit, you can obviously execute by market execution, okay? Using the same parameters. So you can go ahead, execute by market. Obviously, you're gonna have a better entry than everybody else that put in a buy limit, which you shouldn't be tripping at. Okay, that's even better. And like I said, make sure you use proper risk management. Don't over leverage, because yeah, we can lose this trade, which is why I keep repeating it. Every trade I go into, I'm aware I could lose. I'm also aware I could win. Okay. So I'm done. I'm about to go ahead and hop off. I'll see you guys tomorrow, same time, 1 a.m. Central, 2 a.m. Eastern. Y'all have a blessed night. Don't know anything I will, and peace out.